Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this podcast is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is Always Free, and I'm your host, Jason Graystone.
Welcome to the leading podcast for financial empowerment and wealth creation. Subscribe to this podcast so you don't miss an episode. You can connect with Jason on social media and subscribe to the Jason Graystone YouTube channel for weekly videos. Don't forget to also subscribe to the weekly newsletter to receive frequent educational content and action steps to help you design your life so you can be who you want to be. For news on all future events and updates, go to jasongraystone.com.
Well, welcome back to the podcast, guys. If this is the first time you're listening, welcome. This is the number one podcast for financial empowerment and wealth creation. And you know the drill. If you haven't shared it, right, go ahead and share it. If you've got value up to this point, if you're still listening, you've got some value, hopefully. Please don't be selfish. Share it with other people. And if it's the first time you're listening to this, go back after this episode, or stop this episode right now and go back to episode 1. Listen from the start, and you'll really get much more out of the podcast if you do that. Really kind of taking you on a journey of the right order, the right way in which you should focus on building wealth that allowed me to achieve financial freedom. So I urge you to go and do episode 1 and start there. Anyway, this week we're going to be talking a little bit about trading. I do plan on talking a lot more about trading in the future. I've deliberately held off. I delicately delve into trading because I don't want people, we're talking about this in the right order for a reason. Okay, I've worked with many traders at 123 countries. Got a lot of insights into the problems and common mistakes and hurdles and things like that. And usually, one of the main reasons that traders fail is because they start too soon. They're not ready for trading. They think they want to do it, and then they figure out, actually, this isn't for me. They try to shortcut. They jump, through hoops and then trying to cut corners, and it all goes terribly wrong. So in this episode, I just want to throw out a few more myths and traps when it comes to trading. And if you're looking at starting to trade, or you're looking at getting into trading, definitely take on board what I'm going to say in this episode so that you can bypass rabbit holes, essentially, that you don't get lost down for wasting valuable time, 6 months, 12 months, and then you come out and you're back at square one. So I want to talk about that. So the first thing I want to talk about is some of the questions that I get asked. So the most common one is, what time frame should I trade? And I always say you want to look at what your lifestyle looks like. Okay, so you want to maintain consistency. And if you just think about consistency is the answer to everything, it's like literally the secret to life. What you want to think about is consistency. So look, if you can only check the charts for twice a day, or no more than twice a day without disrupting. I'm not talking about forcing and coming out of meetings and trying to look at it while you're on the phone, or doing it while you're on the school run when you should be giving someone else attention, or whatever it might be. I'm talking about literally consistent time that you can block into your calendar and just focus on trading. If you can do that 2 or less times per day, you want to be looking at the daily time frames, the higher time frames to trade, the dailies, and no lower. Okay, don't go any lower than that. So the rule of thumb is, if you can check 2 or less, use the daily time frames. And when I say daily time frames, for those of you who are not that familiar with trading, each candlestick, each of those little bars represents a market session. And depending on what time frame you're looking at, those bars can represent 4 hours or an hour or half hour or 5 minutes or a day or a week, right? Or a month. And when we're talking about the trading timeframes, if you're trading the higher timeframes, there's much less noise. Okay, you haven't got to check the charts as much. It's much more calm. The setups take longer to set up. The setups take longer to complete, and targets take longer to get hit. And it's a much less noisier place for newer traders. And if you can only check the markets twice a day, then you definitely don't want to be going down lower than the daily time frame, meaning that every bar is a day, a whole day, right? And if you're here in the UK, that's 10 o'clock at night, we get that crossover. So one bar closes, next bar opens. Next thing is, if you can check it more than that, if you can check it 4 times or more, okay, or 3 or 4 times, you might consider going down to the 4-hour time frames. But unless you can check consistently more than 4 times per day, then you might want to consider the 60. But unless you can do that, definitely stay on the 4-hour or the daily time frames. Don't go down to the noisy time frames, because you're setting yourself up for failure. And what I always say is, make it hard to fail and easy to succeed. If you was going to go and try and lose a load of weight, don't do it so that you have to prep all the food every day and set all the salads up every day and chop all the food and prep the food and buy all the containers. Just go and buy packaged salads. Like stack up packaged salads in your fridge. Stack up the bottles of water in your fridge so that you don't have to prepare anything. Make it easy to succeed and hard to fail. So don't go out there and think that you're going to, play Led Zeppelin on the guitar when you're just starting out. You best learn the chords, build the muscle memory, then you can speed it up later, okay? Next thing is your personality and your lifestyle, okay? So we just touched on lifestyle there. Personality is going to come down to whether or not you like being right more than you're wrong, or whether you are happy being wrong more than you're right, as long as you've got a great risk-reward profile. In other words, your reward to risk is skewed heavily in your favor. You've got like a 3-to-1, 2-to-1, maybe a 5, 6, 10-to-1, and you're happy being wrong more than you're right, because you know over time you're going to get profit. But most traders, when they start out that I know, they like to be wrong just a little bit more than they're right at least. So they go for lower reward to risk profiles, something like a 1-to-1. And then you can build on that once you become a little bit more experienced. You build discretion, you've got a little bit more aggression in your trading, and you're a bit more poised and calm. You can start to do that. All right, so that's personality. So that's one thing. The other thing is going to be opportunity. So some traders just like to have lots of opportunity, to feel like, that they're... it's to overcome a mental block, really, because we're so... we're so used to exchanging time for money in a normal job. When you go to trading, it's like, wow, there's no correlation between time and money. You can earn as much in a day as you can in a year. And sometimes, you can earn a month's salary in a day. You can earn a year's salary in a week. And there's no time for money correlation, right? So you're going to have to weigh that up as well. Next thing I get asked is, do I need to do all the back testing? And what I'll say to that is, why wouldn't you, right? Because when you go out into the markets, okay, we never know what's going to happen next for certain. So all we can do is mentally prepare, because it's just a 10% technical game, 90% psychology, right? 90% mental game. So if all we've got to do is prepare our mind mentally to have the mental ability to go out and withstand drawdowns and look the market in the eye and trade large amounts of capital and be all right with that, okay, and be all right with losers and be all right with winners and just be calm, all we've got to go on is historical data. So if you test your system and you've got black and white data looking you in the eye, you can then look back and go, all right, well, this is perfectly normal. I've taken 3 losing trades in a row. Last August, we had 7 losing trades in a row. The August before that, we had 6 losing trades in a row. The August before that, we had 7 trades in a row, and so on, right? So it keeps you calm. You go back to, this is perfectly normal, and I just trade my plan. The other thing with back testing, it's going to give you the maximum loss that you're likely to occur, the maximum drawdown, the biggest losing trade that you're likely to occur. So when these things come up, you go, right, well, I've taken quite a few hits in a row here. Am I near my maximum drawdown historically? I'm at 6%. Oh, well, my maximum drawdown historically is 8%. So, this is normal. I'm just going to ride it out. I know that every losing trade that I take takes me closer to a winner. And you only get that from having that raw data. You only get that from having expectations of backtested results. So why the hell wouldn't you backtest? I don't know. It blows my mind. Some people don't do it, and they end up going round and round and round and round and round in circles, saying they're going to build some kind of discretionary system. I tell you what, you better have a lot of money if you're going to do that, and you better be, well, you must be stupid. So backtest, that's all I can say, right? Next one, signal services. Do you give signals? What do you think of signal services? Can I just follow your trades? And here's the answer to that, right? Let's just imagine, bearing in mind what I've just said about it's a 90% mental game, okay? And you need stability and you need to feed your family, right? So you've got the pressure of that. You just want to know what's likely to happen next. You want to know the probabilities of what's going to happen next. So if you don't know what's going on, and I've developed my strategy and I just turn it into a signal service where I go, right, I'm getting in here, I'm getting out here, getting in here, getting out here. And you just follow blind, right? And you place a trade and the trade loses, okay? And then you place another trade because I tell you to, and that trade loses. And then you're down 2% of your account, right? And then another trade setup comes and I say, right, here we go. You ready to take this? And you're looking at me funny going, is this guy for real? I'm going, yep, I'm going to take this trade now. You take the trade and it loses, right? Do you think for 5 minutes that you are going to happily take the fourth trade or the fifth trade or the sixth trade? Absolutely not. You're going to be thinking, this is broke, it's a scam, this guy doesn't know what he's talking about. And then what happens? I take the next trade, I win, you missed out because you didn't have the mental stability to stay in it, right? Because you've got no idea what's behind it. You have no idea what those back-tested results are. Whereas I'm looking here going, right, yeah, okay, I've got 3 losers in a row, perfectly normal. I'm just going to keep trading the plan. And I know over time that I'm going to be profitable. But you don't. So you're just following blind. And you're going to jeopardize your system because you don't have the mental stability to stay with a plan. And that's because you don't know what's likely to happen next. You haven't got the probabilities. Okay, so signal services, for the same reason that you don't backtest, if you are going to take a signal service or you are going to set up some kind of automated system, make sure you know the ins and outs of the system and you've done the backtesting yourself, right? It doesn't hurt to do that. Next thing is returns. Okay, so returns, first of all, people always ask me, how much do I need to make money? And look, I can't tell you how much you need to make money because I don't know your living costs. I don't know your lifestyle. I don't know, how much you need to take. But what I will say is this. First of all, with trading and speculation, I would aim to hit absolute minimum 25% returns per year to make it worth your while. Okay, if you're, and I'm talking about if you're trading full time. I'm not talking about if you're just managing your wealth or managing your funds, because anything over the bank is great, right? So if you're swing trading and you're getting 10, 15, 20% just from swing trading, great. That's going to be better than any bank, better than property, better than a lot of investment vehicles. But for me, for the level of trading that I do, I want an absolute bare bones minimum of 25% plus for returns, because otherwise I can make more money doing other things, right? I can put money to other uses where I can make more than, for less of my time. So there's that sweet spot that I've figured out. So you're looking at 25% plus. So let's just say, and that's conservative, right? So most of our traders do 2, 3, 4% around that per month on average. That might not sound like a lot, but that compounds out to, if you was to do 4% per month, that will compound out to 60% per year. Okay, now I'm not sniffing at that. Let's just say that if you come to me and you learn to trade and you're asking me, well, how much can I take? How much do I need to make a full-time income? What I'm going to say to you is, first of all, you're not going to be earning the top whack because you're just learning. Second of all, it's going to take you 12, 18 months, maybe 2 years to become consistently profitable and prove it to yourself. Okay. And then secondly, or thirdly, then you're going to start making the returns, and then you're going to start accumulating or racking up your account. So you're not going to want to take income for the first year, right? Because everything I do is based on yearly averages. So let's just say that you're getting 30%. Let's just say you're doing 30%, right? 30% per year, and that's good going. You've just got into the swing of it. You're consistently generating 30%, and over the yearly period, you've got 30%, okay? Now, over that year, you might have generated 30%, but you definitely don't want to take all of that income out, do you? You don't want to take all of the income out of your trading account because you want it to grow. You might go into a drawdown in the first month of the next year. So you're going to want to leave some money in there, and the maximum I would suggest you take is about 50% of the profits. So let's just say 15%, okay? That's 15% of the profits. And then you're going to want to divide that over a 12-month period, okay? So 15 divided by 12, what's that? It's like basically 1.25, okay? So you can then get some kind of perspective around how much you can take of your account consistently per month on the following year. 1.25% per year you want to be taking out of your account for income. Now, what does that 1.25% represent? Well, if you've got a 100 grand account, that's £1,250. If you've got a 200 grand account, that's £2,500. If you've got a $500,000 account, it's much more. So it's all going to depend on percentages and what you need. There's no point me giving you a monetary figure. I can give you percentages, and I can be pretty accurate and pretty strategic about how, what I've just given you is a pretty good rule of thumb. So it's then up to you to apply what your income costs are, what your living expenses are for a 12-month period, and then how much you can take of your account, which might be 1.25% per month over the next year, and then look at the error between what you need, or the default between what you need and what you're generating, and what's the shortfall, and that's basically how you calculate it. So I appreciate I've been over a lot, okay, and some really, really strong, valid points there. I want you to take those on board, and then next week we can talk a little bit more about getting into trading. And if you're interested in trading, stick with this podcast. I'm going to teach you exactly the right way to go about it, okay? So that's it for this week, guys. Hopefully you've had a good one. If you got value from this, share it around. And as I say, if you just ended up listening to the end of this podcast and it's the first time you've listened, go back to number 1 now, and I guarantee you're in for a real treat. So that's it, guys. Have a great rest of your day and weekend, and I'll see you then.
For news on all future events and updates, go to jasongraystone.com.